Hello everyone, this is Anne-Marie and this is the SPY report, trading the levels with SPY, the IWM and the Qs. This has been a great moneymaker for the folks that are running with it, so I urge you to continue to look at those levels from the blog. I'm going to do something a little bit different here that we haven't normally done, but I think to start the week it's a good exercise. And so that's how we're going to look at it. We're going to compare these charts as they sit on a weekly basis. We're going to compare what the technical data looks like underneath and what the technical data looks like above, right? And by technical data above, I mean these moving averages, but as well as the candlesticks. SPY, we've got an ergodic that is extremely flat here. All right, so that is telling us relative lack of momentum. We can see in all of these charts, this is a month of action, essentially closing round and about the same area within 60 cents. Almost the same here, maybe 90 cents. This is closing within the same region. So we've had a month here, a month here. This is a lot more sideways. And then we've had 1, 2, 3, 4, 5, 6 weeks in the same space here in the Qs. Now what we do see here is upside resolution showing up in these momentum triggers here with the SMI ergodic oscillator, which is a great tool in Motive Wave. These charts are run by Motive Wave, and I do like them very, very much. That's showing a little bit of strength. So what's the trade? We're going to watch for the breakouts above these highs. Listen, if we've been trading 4 to 6 weeks within a range, doesn't it make sense to wait if you're looking for the swing? Don't you want to wait for it to break out or break up? And then you can be just delighted about getting yourself into any kind of relative swing trade. For me, because of this event, I'm going to trade level to level and anticipate that we stay congested until the movement really starts showing something big. The one fly in the ointment here is that although this is punching to the upside, we have the SMIs in extremely high trending territory. When they're in trending territory like this, obviously charts continue to move up, but it means momentum is constant. It is no longer accelerating. And so that gives us a little bit of flat sideways action that we've got until it resolves. So the name of the game is going to be, can I resolve or do I break down? I will say this, I am very keen on being long the Qs up and out over this 77.26 area. It's going to be a big deal in my mind. If it fades completely here, we're going to be caught still in the same space. I'm not really sure how long the charts have stayed in this type of formation, but over here, clearly we can look at, listen, if I just draw this line here, look at how many weeks we play around this level. 1, 2, 3, 4, 5, doesn't do this one, 6, 7, 8, 9, 10, 11 weeks trading in the same relative space before we moved forward. Could we do that again? Absolutely. September could be one of those months that just gives us nothing but piano keys. So we've just got to be careful, realize that the charts can give us those jagged spaces. Look at this one, 1, 2, 3, 4, 5, 6. Missed that one. 7, 8, 9 of 10 weeks. It hit one particular price level, 67.27. So again, could certainly see that. Let's go down to the dailies. Notice how similar from the daily perspective these charts look, except for how the week ends, right? These guys, this is still closing well below these top ends of the gap. This is the same way. As a matter of fact, this is much higher than this level. And so if we look at the wave rotation, we have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high. That is telegraphing lower levels. The problem is all of these support regions, the 10, the 50, the weekly VWAP, the monthly VWAP, all of these charts sitting in the same, all of these lines sitting in the same relative space. Look at the negative formation building here. Also, negative price action. Notice this. Also, negative momentum action, negative SMIs. Look at how similar all of the SMIs look, though. Essentially, Qs still stronger, sitting well above the 0 line, right? That's in the 15 area, still in the neutral zone, but not like these guys, right, which have not gotten even to the 0 line, right? They're not above 0 at all. Both of these guys below 0, this one above 0, but drifting momentum as price moves up. Now, does that always mean this is going to pull back? Absolutely not. Most of the time when the moving averages hold, that's where the charts actually get their strength. So this could just be pulling into 0 and then inflecting to the upside again. Same type of formation though. This giving us the lower high and lower low, this giving us the lower high and lower low. Same pattern, high, low, lower high, lower low, lower high, lower low, lower high. Not quite as profound as this, but essentially the same. This one doesn't quite do that, right? It's got a high, a low, a retest, a lower low, and an almost retest. Let's see what the difference is. The high there is 77.09. The high here is 77.28. And again, that's the number that we want to look at. We want to watch that come up into those regions and breach so that we'll have a good chance at upside momentum. That's what I'm really looking for there. Let's go down into straight down into the 1 hour chart. That'll give us quite a bit of granularity as we look towards the week. And I like comparing these side by side so that you can see the relative motion as to what's happening, right? And so we can see essentially Friday's trades looked much the same in terms of the retracement. Let's take a Fibonacci here though and see how much this chart actually took. Okay, so the retracement here, 38.2, just a little below that. Not even 38.2, so that one's a little bit stronger. Also not quite 38.2. So we're looking at this being the strongest, this being the second strongest, and SPY being the weakest of the bunch, having the deepest retracement. But still, that retracement is 38.2. Hey, listen, I talk to a lot of people that think the market's going to roll over. I can't say that with a great deal of confidence. I really cannot. I mean, I can't. I'm essentially bullish. I think the broad formations are decidedly bullish at this time. And so I'm just looking for that pullback. We are caught in between the moving averages. The only one that's sitting up above all the others is the Qs. The Q is sitting above the 50, the 200, the VWAPs, the 30, and sitting right at the 10. What's going on with the IWM? Trapped between the moving averages. What's going on with SPY? Trapped between the moving averages. So, hey, listen, let's just get up and out. Let's get up and over those events. If we're looking for trades that carry through, we must stay away from relative congestion. Remember, when you are trading a chart in relative congestion and you cannot see the way the chart is resolving, potentially because of what might be on the horizon, then just step out. If you take the trade, it's like throwing dice, right? And when you don't have any real skill on those dice, right? I know there's some people that can actually throw the dice in a specific way, but we don't actually have that option. We're either trading with an edge or rolling dice. And see, I'm not a big fan of doing that. I'm just not a big fan. I've lost way too much money in my early career to play around like that. I'm just going to wait until the market compels me to take a trade, and it is not here. Now, if you want the intraday levels to trade, check out the blog. It's in the SPY membership. Remember, for the whole month of September, that is free to anyone who signs up for a bronze membership. They got automatically upgraded with no obligation to continue at all. You just take a look at it, and it should be able to give you something really interesting to trade intraday if you like, and then you get those levels watching for the swing. It'll give you the approximate stop and certainly the strike price, because we love options around here. Good luck trading.